Okay. Now third process is your returns process. Till now we have seen how regular OTC works on credit basis, cash sales and rush order on immediate delivery basis. So now let's see what is the returns. So in every case you are trying to do the returns. That means returns when will you do if any product is damaged. Let me try to put it on. It can be any business context when you try to do the return delivery. Okay. So maybe you have received the wrong product. So product got damaged and additional quantity. That means you ordered certain quantity, but more than whatever the quantity you required, more than that you have received, or something like blocked quantities. If you see, so certain countries, all products will not be allowed. Maybe some legal restrictions also will be there, and maybe overpriced your client. Sometimes uh, quality difference, maybe second quality, third quality he sent, but we agreed on good quality. So like this, most of the times you will have a difference. Certain cases you have other reasons also, maybe price or price I told you, right? Maybe price variations, or else maybe taxes, or some other reasons, XX reasons will be there. So these regions, for these regions will be defined in SAP at the time of doing return delivery as an order region. You can able to assign it. When assume that I will tell you one practical example. So from our previous example, cocoa and milk private limited got certain order for 200 pieces, out of which delivery done 250 pieces, and I got a billing of like 250 pieces. So either case, if I ordered 200, I don't want it at any cost because it is cost effective, and even I cannot fulfill my requirement for coming quarter or existing quarter. I don't want this stock, so that I have a chances to return this stock. So this is one scenario one. So like additional stock. Okay, this is scenario one. Now let's take the similar example, 200 stock, but so 200 got delivered, 200 got billed, but out of which, you know, some 20 got damaged. For this 20, I just need to return it. I need to get, my money need to be credited back to me, being a customer. So that means this comes under scenario two. So like, where is that product damaged? Okay, or else I got scenario 3, 200 stock, all stock. If I ordered for chocolates, I got 200 milk powder packets and it is got billed. Then 200 need to be returned against 200 whatever it is billed, that need to be adjusted through credit memo. That means this is scenario 3. Now blocked. Blocked means our country is not allowing, or else it is not passed certain government restrictions, but company didn't check properly but delivered. Later offline they have a discussion, it need to be returned. Such cases also 200 product price worth will be adjusted through credit memo to the customer. So that means that is scenario 4. Okay, so now everything is fine in scenario 5. 200 stock, 200 stock, 200 stock. Assume that each piece is €1, maybe €2, 400 euros, but my customer had initial agreement for €400, but company changed, maybe because of price change or later billing, so it got priced with €400. So 200 so sorry, €400, but it is charged with €600. Actually, when you talk about actuals, it should be €400. So the remaining €200 will be adjusted through credit memo. That means it is overpriced, scenario 5. So next is quality difference. It is also similar like. So if you go for agriculture products or else any milk products, so generally what happens in business scenario, if any first crop, like first 6 months I have one crop, and after 6 months another crop for my making certain oils, edible oils. First crop I got a very good product, so the quality is very good, and second crop quality is not good, but your customer is so insistent, he wanted to maintain uh, number one quality how he got for first 6 months, such kind of oil only he is expecting. Such cases the quality difference is there, then all the stock will be returned back, and it will be like your scenario 6. So now you can see all the scenarios. Let's try to check how the returns works. Okay, how the returns works. Return order. So for your order, it is war. Delivery is what you call LF is the document type. Billing is F2 in standard. For returns, it is RE, and your delivery will be LR, and your billing will be RE. So here item category will be the TAN. When they are doing returns, item category will be REN. If it is free goods, it is TANN. It is RENN. Now let's try to check how it works in SAP system, this process. Now let's try to check the configurations for return. PRO, go to again the same space where we have the document types, sales and distribution, sales documents, and sales document header, define sales document types. Now regular order is war, and let's try to make a comparison with RE. So here a couple of key differences will be there. So one thing is that order, if you see, document category is C. So whereas for returns, it should be H. That's how your internal code will be identified these two document types. Okay, and you have something screen sequence type also will be different. And if you see another big difference, your return delivery document type will be LR. I will show you why it is differs while creating order, return order and delivery, and it is LF. Okay, let's remove this block. We don't require this one. Someone has kept. So now let's try to make a comparison. So your delivery related billing will be F2 and your order related billing will be F1 here. Now let's try to compare the returns. Returns, sorry, where is the returns? So let's try to make a comparison. For returns, it is RE. As I said that in Excel, it is this. So your billing block will be there. Why? Because before proceeding ahead for your credit memo, you have to check how much amount you are paying back. So maybe based on price date, if any redetermination is happens in your copy control, the price might be not exactly, it's whatever the at the time of order you have 200 euros. In returns, if you are doing 300 euros, your customer will be benefited. So that's where you are going to get a potential loss. So that's why always keep a block and have an observation. But when it comes to real time practice, how it happens, so it will go for workflow. Someone need to be approved for your return order before creating the bill. Once a bill is created, it will, your account values will be posted to your fi based on account determination. There are sometimes, a lot of confusion prevails. So always better need to check before raising credit memo. That's why you will have a default block. This block varies from business to business. Default billing block will be like this. So now let's try to, these are the only differences, nothing else. And let's try to comparison of your item category. Header we compared. Now let's go to the item, sales document item. So here, if you see here, assign, let's try to understand, define item categories. So now let's go back 10 and your return item category REN. So only one couple of key differences you can able to find it out. One is that if you go for 10, it is delivery related billing. So for returns, it is order related billing. So there is a order related billing means it is not mandatory. Certain business processes, certain customers will ask, we want a delivery related billing also. It's up to them. Okay, we can able to give the configuration accordingly. So, but in standard it is a, but if you see the difference here, so for your, if you are not doing returns for your OTC, then it will not be there for your OR document type and your TAN item category. So if you go for REN, it will be there. See, when you are taking back products to your inventory, you don't want to check any credit. When you are giving to customer, then only you are checking the credit. That's why it is off. And if you see one of the key observation, business item, as we discussed that, if you would like to change your sales and billing and shipping data need to be get changed, you have to tick this mark. Otherwise certain fields will be disabled, like shipping conditions or your incoterms can be disabled. Why we have to off this one? Because on returns we will not allow you, our end user or customer care or anyone to be, or customer need to be not allowed to get modify this data. That's why it is the basic difference. If you find this, you have three differences. One is your billing relevance, and second one is returns is active for returns, and third one is credit is inactivated. Returns there is no point to check, and your business item also will be inactivated, because on written document you will not be allowed to change your sales, shipping and billing data. These are the differences. Let's try to check the item category assignment. So if you go for our ZOR1 norm, so it's like our item category in order, it will be there like 10. If you go for REN norm, sorry, RE is a document type. For RE norm, you will have REN like this. There is no much differs. So if you see, this is the item category determination. This, if you copied REN as ZREN or something like that, you have to do the item category determination. It depends on your customer needs. Now let's try to observe the schedule and category. This need to be observed. So for REN item category, you have a DN is the schedule and category. Okay. So DN, what is DN? We will see now. And let's try to check for TAN. It is CP or CN or something like that. Okay. For TAN, you have CN and CP. In the similar way, if you go for cash sales, BVN, you will have CP and all. There is no much difference. Let's try to observe what is the basic difference between this DN and uh, what is the basic difference between your DN and what is the basic difference between your DN and CN or CP? What is DN? Let's select this. This is for why we have different schedule and category. And let's go to the CP and CN. CP and CN, anyhow, we know, but still for comparison, I'm just picking up all these three. So now if you see for CN or CP, the moment type will be 601. Okay. Now let's go to the DN. It is 651. For returns, it is 651, the moment type. Let's try to observe all three are relevant for delivery. And when it comes to CP, you have tick marks like availability because you are checking for your standard product while using war document type. If it is CP there, then you do the availability check whether stock is available or not. If you go for DN, you will not be there because stock is coming from outside inventory. It is adding. There is no point to check availability check within the SAP system. So that's why all these are the uh, not selected. So, but most important difference is 651. Most of the time 651 is the moment type they are using. So let's try to get on to this. I will show you the written moment type. This is SD. It's very important to remember. For your regular process, you are using 601. Like, see 653. Unrestricted stock means you are using like this. So sometimes if any quality inspection or something will be there, reversal will be there like 656. So something returns need to be moved to blocked stock, then you have to choose this. All these are the customer requirements. Based on that, we will choose it. But for your regular scenario for DN is a schedule and category. This is all about your return schedule and category differs from your CP. These will not be checked actually. Okay. Let's try to create the process now. Now let's try to create the first your war document type. Let's try to understand how it works. Let's put it 200 as a 20 stock. Let's try to check schedule lines. Let's try to remove this block. It's got defaulted. Check incomplete log. Let's try to save this one. Okay. So that means you can do the delivery also directly here. So schedule line up to date. Let's try to make it as 27 because system is trying to confirm for 27. So let's go and pick the stock here. 20, no issues. Do the post goods issue. Now let's try to do the bill. So save your bill. What is the important observation? Let's go to the change mode and let's try to see the accounting document. So what are all the posting keys we have? For customer 01, 50 is for your revenues. Okay. And for deductions, it is 40. Let me take the screenshot. On returns, we will try to observe this, how it works. Let's take the separate screenshot. I'll keep it aside. So now you got a order. Now you got a bill for all the products. Let's try to comparison of one of our scenario. Assume that out of 20 stock, 10 stock got damaged. So always returns has a possibility you can able to create in returns in three ways. Like you can create manually without reference any document, RE, or else you can try to create with reference to invoice. But most of the business scenarios in the world will be followed with invoice reference. Sometimes you can find any special requirement on such case, you can able to take the reference with your order, or else your customer have given privilege to the user who is putting returns. You can able to take the order reference or returns reference. I have seen all these scenarios in my project examples. So let's try to create the returns now with reference to bill actually. So the document type is RE. Let's take create with reference. So we are taking with reference to billing document. So let's copy this. So now everything got copied. So let's put it return. Let me put it return 20 pieces, 20 damaged. Okay, out of sorry, out of 20 stock, 20 boxes, assume that 10 got damaged in our scenario. So we have 20 boxes ordered, that is got copied. So you have to adjust the 10 if you wanted to return. It is asking order region. Now if you try to comparison with order, regular sales order, you don't require, but when you are returning, you should have to identify on which return. So you can try to find out what should be the, so maybe you can say poor quality or damaged in transit, or any one of the reason, price was too high or something like that. So quantity discrepancy, it depends on your scenario. You have to choose the order regions. It can be defined also, that we are going to see in one session how order regions will be defined. Let's put it poor quality of the stock, 10 pieces. So your customer said, so when I say 10 pieces, your amount will be adjusted accordingly. Now if you go for 20 pieces, you have one price, 10 pieces, that means this is the amount it need to be returned. So let's try to do the delivery. So maybe on returns, your customer, why we are stopping to generate the bill credit memo, because customer says 10 is spoiled. Some illogical customers will be there. uh, so what a company will observe, we can send only five, we can keep it at our side. Okay, so such kind of things they will do. That's why we are putting the billing block. Once amount is paid, customer can show his true colors, but it is very rare. Might be to customer side also dishonesty, or else his manual mistakes, he might do it. Instead of 10, he might return 5, actually it should be returned 10. So such kind of scenarios will be there. That's why we're putting the billing block for various regions. Now let's try to do the delivery now. So delivery in the sense, you are receiving the goods. It's a goods receipt. Now if you see, you can ask me, you have for order side PGI is there. That means you are sending out. Receipt means you are receiving to your inventory. When you are receiving, you need not pick. It is coming from there. That's why always your uh, picking relevant for your delivery item category will be unchecked. So it is got disabled like this. Now let's do the post goods receipt. So that means stock I have received. Now let's try to do the bill. What it says, we have a block, right? It says that, so it is generating the log. Now if you go to the log, it's a blocked for billing. Now your company says that top management or senior customer care, go ahead. We have received all the stock. Sometimes your quality might confirm, depends on your business scenario. Let's try to remove the block and save it. So now let's try to do the bill now. So now if you see, you have a RE document, as I said that. So you have the amount. This is how it is coming. Let's try to save this one. So maybe account determination error, we got it because of we have defined our own procedure. Let's go to the environment and account determination analysis, because I'm just keeping this error in every business process, because you must have a habit of how it determines. Now let's go to VOFA. For a time being, you try to change our procedure for practice what we have followed instead of changing total account determination. So let's try to put it our own procedure. Let's save this. And now let's try to release the document to accounting. So now click on this release. It will be released. Now let's try to do the accounting entries comparison. So now see, this is how we got it. Give me a moment. Let's try to put the both screenshots and we'll comparison on Excel for returns. So when you make a comparison, let me share the Excel. When you make a comparison here, so if you see here, see whatever initially you have, that will be reversed all your entries when you compare with returns. This is the observation you can able to do it. So if you see here, customer accounts, initially it is this one. So when it is reverse, your posting key, it will be changed. So your credit entry will become like a debit entry will become like a credit entry. But 19010 is for your 20 boxes. For 10 boxes, this is the entry. That's why you have the amount difference exactly off. So when you see this, this is how your accounting entries will be placed when you compare with order and delivery. So when you see initially your for order posting key is 01, but when you reverse your posting key got changed for written item category to 11 for customer. So whatever the debit entries you have 40, that will be changed into credit entry for once it is there's a written billing got settled down, everything will be get adjusted accordingly at your finance end. This is all about your returns. So Josh Levy,
Yeah, I think now you're recording.
yeah, I just recorded. That's what.
Hello?